Good afternoon, traders, and welcome to the Blue Line Metals Edge here for Wednesday, February 1st. I'm Phillip, Streible, Chief Market Strategist at Blue Line Futures. Remember, if you need additional information, go to BlueLineFutures.com. Be sure to check out our research page here and sign up for a free trial of our research. We'll set you up with a 2-week trial. Just select the reports that you like to receive, and then it'll taper off after 2 weeks here. If you'd like to get additional reports, shoot us an email, give us a call, let us know. Or if there's a particular market that we're not covering that you like, let us know on that as well. So getting into it here, we've got the FOMC meeting coming out in about 30 minutes. Kind of been a two-sided volatile trading session here today. You could see that gold has really been kind of the buy since back here with the DMI plus crossing over the DI minus, and it's been a strong uptrend. Any kind of pullback here has been shallow in nature, especially down to this upward trend line. We've been consolidating within this box here for about most of the beginning of the year, and we're kind of stuck where 1950 is the upside, about 1900 has been the downside, and if we've even gotten that shallow. So what we've been doing here today is stacking in some orders, using those micro contracts and really trying to risk manage it depending on the account size that you are. Coming in at like 1920, so that'd be about a $20 correction from here, 1900 and 1885. Most likely have some kind of stop out point if we break below this level right here, this 1835 level to 1850. So we want to use on these wide volatile events, these really, event driven things where there's a lot of anxiety built into it. You want to use those smaller contracts here and have some risk management. Now getting into the other markets here, that silver market, again, that's another one. Sideways for this is since mid-December here, haven't gone anywhere. We got a two-part strategy going with this. We've got a scale in going in on the downside because most people are looking at the upside of silver and they believe that global supplies are tightening, that the number of fundamental uses and also with the Fed eventually going to pivot dovish. They want to be long some of these types of assets here that benefit in that environment. So there's people that are buying about $23.30, $23, and $22.85 is their scale-in on silver. I would consider adding another one down at $20.50, depending on the account size. Have that stop loss below $22, and then look for the market to move up to the upside, $26 to $28. Other people are using kind of a two-prong approach where they're buying the strangle. They're buying the $25 call. They're also buying the $22.50 put. They're looking for a big move in one direction or the other. Totally possible. Platinum market here, that's another one. It's coming close to that critical support. So we're looking at scaling into this market as well. Down here, it's about 985 to 995 depending on what contract you're looking at. That's going to be your support zone. We're really looking at another move back on up to about 1050 where we let some of those go. Copper has been correcting. It's back in this consolidation zone. A lot of questions, a lot of uncertainty with regards to China, their reopening and how things are kicking off. We're going to see movements in all these markets, the bonds, the 10-year note, get into all the currencies, your Australian dollar, your British pound. These are all, the British pound is one that I'm favoring to move back down about 100 points, and I would risk it against this double top here. If you look at the chart, this has been the clear resistance zone. So we're keeping an eye on that. The dollar index, I believe, is going to break out from kind of this triangular pattern, start to move on up. So we'll change the angle on this just a touch, and let's see if the dollar index can push back up and Jerome Powell could be a little bit more hawkish than what he is. Other markets not going anywhere. Cotton hasn't gone anywhere. Cocoa's stuck in a range right now. Really, we should have a box going, a rectangular one on this. Coffee threw on the afterburners. We took off some of those options yesterday. It's back and filling here today. We come back down, most likely to this trend line. That's where you're going to want to look to get long. They've had some problems with the Arabic coffee in the growing regions. And then finally, sugar, backing off as well. Sugar, this is like a 4.5-year high on that. We got up to almost 22. There are some short-dated March put options you can buy, real inexpensive, couple $100. See if this thing will flush back down anywhere around 20, 50. Those were running about 18, 19 ticks. Get any questions, futures or option trading? Give me a call, 312-858-7303. Remember, futures and option trading does involve risk of loss. May not be suitable to all investors. Good luck, good trade.